Happy Friday, traders. Thanks for joining me this morning at 8:03 a.m. Chicago time on Friday, the 9th of September, 2022. Hang in there, folks. My brain is going to catch up with me any second now. I've been here since about 6:15 a.m., so I think my brain's already given up on Friday. This is episode number 2311. Does it sound like there's a reverb or an echo in the sound? Let me know. The office is still kind of, the walls are empty and things are not unpacked, so there's no sound absorption at all. In any case, thanks for joining me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, man, I am going to do my best not to make this last forever. So let's fix this. There we go. New monitor. It's a high resolution monitor, so things are a little bit quirky. But we're looking at a market now. I'm going to try my best not to make this long because some of the stuff that's happening here structurally is quite interesting in terms of the auction. But overall, currently we are in a risk-on posture in the overnight session. The APAC region transferred, carried the U.S. close into APAC, and then that boost was carried into Europe, and now it's coming back to us on the U.S. Open. So risk on sentiment. The dollar's fallen below $109. It actually fell below 108.50. That's a pretty decent boost for U.S. equities. There's also news that the U.S.-Iran deal is kind of falling apart. They seem to be going backwards, according to the Secretary of State. We see flow out of staples into higher risk assets this morning. I expect that to continue. I expect that to continue through the session. There's some significant structural developments here, especially in crude. Crude's very exciting right now to me. So we'll get into that here in a minute. This morning, in terms of news events, we had unemployment rate out of Canada, which has jumped up 50 basis points at 5.4% versus the prior 4.9 was expected of 4.9. A big jump up in the unemployment rate in Canada. Employment change, 39,700 jobs were lost versus 14,000 to be gained. That's pretty bad news for Canada there. Helps the central bank, that's for sure. We do get wholesale inventories at 10 a.m. today. Not a significant figure, expecting 0.8%. And then we have Fed's Evans at 10 also, Fed's George at 12, and Fed's Waller at 12. And that wraps up the weekend, a standard weekend. No more holidays until, what is it, Indigenous Peoples Day, maybe? I think Veterans Day is November 11th. So I think it's Columbus or / Indigenous Peoples Day next. So we're free and clear all the way through to Thanksgiving. Looking at crude, look at that pop in crude. I had talked about this yesterday. In fact, the notes that I posted, if you're a Convergent member, go to the Mavens channel on chat and look at my notes and look at what's happening in crude. Very clear, very awesome live example of how excesses work. The note that I made yesterday in terms of crude, last night in terms of crude for homework, is that CL had an inside day today. This was for yesterday. It is key for buyers to hold today's low to start squeezing shorts back to the MCV pocket, 86.90. 86.90. And at that point, it was trading, it was basically trading at 83.50. Okay, and I said, recall that if CL gets above 84.39, 84.39, look at CL, it's 86.21, significantly higher. If it gets above 84.39, it would likely continue to auction off the excess high, which was the open drive down from Tuesday back to 86. We're at 86.33. Remember, we were at 83.50 when I wrote these notes. A significant trade might present itself in this situation. That significant trade is a long crude, and this is likely to be an intermediate term long low that was put in at 81.20, expecting crude to just continue higher, and it's doing that already. So that's where we stand. When I came in this morning, crude had basically pushed to just below the prior month low, which was 85.31, and with a very weak high and a very clear zipper, which would set up a breakout long into the prior month's range. And if so, then again, we would be looking for that 86. So here's crude at 86.25, up 3.23%. There is no chart up. I'm just spewing numbers. We'll go over the chart in a minute. The S&P P-shaped profile this morning. And what does a P-shaped profile signify? Does anybody want to answer that? What is a P-shaped profile? Tell us. 204,000 contracts have traded. The inventory is 95% long. 95% long, meaning 95% of the day's volume is above prior settlement. Correct. Short liquidation or short covering. Well done, folks. Long liquidation is B-shaped, actually. Starts at the high, moves to the low, and then starts balancing. But this is a P shape, which tells us that it's short covering, short liquidation. And the range is 39.25, which is almost exactly the same as it was yesterday at this time. Point of control shifted way higher. We'll go over what I had said is very likely to happen over the next couple of days and how it played out. So that's what we've got for today. Here's what was expected yesterday. This is after much discussion. Do you remember me squaring and circling that 40.15 yesterday? Well, we're at 40.45 on the high in the S&P currently. So yesterday, the entire premise is that we push above the 75, and we are likely to squeeze back to the next key balance from last Friday, which is the 40.15 to bring us back to the 40.20 to retest the 40.20. If you recall, last Friday went to 40.1950 and came right off and sold off pretty hard. And what I talked about is it's very likely to push to 40.15 yesterday, and 40.20 then becomes on deck. And if we get to 40.20, then we're likely to push to 40.42, 40.50, which is the mid-century figure, and then we're into prior week's high at 40.64, which I don't expect us to get today. I don't expect us to get 40.64, although it's well within range because it's only 30 points away. So yesterday, it performed exactly as expected. We did. Yesterday's high was what? Something like 40. What was yesterday's high? 40.11. 40.11. So it missed this 40.15, but it got pretty darn close. So this is where we stand. Here's what things look like on the chart. Let's look at crude first. What's going on here? Seem to be missing data. Let's look at crude first real quick. Well, let's let it load. Let's look at the S&P. Quick review here. Bada bing, bada boom. I have a much bigger desk now, so I'm turning my head way over to see what's going on. Let's switch to the Edge Pro X screen. Here we go. Okay, so here's Edge Pro X. So what do we have from yesterday? Here's where this is what things looked like yesterday. We sold off and we went down here. Let me get my yellow marker, Jello. We opened right down there at 39.55. We consolidated down under the 39.55. 39.55 carries over from way back. We created what I call the LIS. Those of you who are convergent saw the notes early about the LIS at 39.55. This is the key line in the sand very early on in the session. And we held the 39.55 for a bit, then we broke through and we created separation between the VWAP mid, the RTH VWAP mid, and current prices. So now we're seeing it push through that 39.75 area, which is right up here. 39.75 pops through. Remember, 39.75, really important area for the buyers to take. Once we take out the 39.75, we expect it to run to 40.15. And we poke through, come back down, pull all the way back to the mid. The camera's in the way here. Pull all the way back to the mid. Beautiful mid test here. And then continuation, breaks the IB high beautifully and pushes almost to the 40.15, which is right here, the 40.15. Then we get this bizarro stop loss creating. The long here just absolutely got obliterated. Stop loss creating fall on what looked like news. And I can't tell what it was either. It's the ECB saying it might do another, say, a 75 basis point lift in interest rates. Lagarde said that it's nowhere near the neutral rate for the euro. Bizarre thing to say since they haven't raised rates. That was the first time they raised rates yesterday, and she's stating the obvious, really going out on a limb on this one. And then at the same time, there was something about the nuclear deal with Iran falling apart. I'm not sure. If anybody knows better, let me know. The death of the Queen came in at a little bit before 12. This move here happened well before that. But what I don't feel like that's macro news. Maybe I'm wrong. Maybe I'm ignorant about the monarchy and its influence, but it's not like there's a revolution brewing here. They didn't really have political power. Nothing significant as far as I understand. I lived in England, but I was a kid, so I'm out of touch. So we consolidate into the close, and immediately after the close, boom, we get right into that 40.15 and tag it. Pretty bullish close. Remember, Wednesday, we were expecting it to fall off. The trend looked to the downside, and I came in yesterday and I said that was completely wrong. The market did not agree with that hypothesis at all, with that scenario at all. And I talked about how that's the Monty Hall problem. When everything points in a certain direction, this is really an important lesson that we saw play out live. I came out here on Wednesday and I talked about how everything is set up for a selling spree. I was expecting much lower prices, 38.50 and so on, and made an argument for where my homework was coming up with that primary scenario of selling off. Then Wednesday happens and the market absolutely refutes that idea. And I talked about how that is significant. That's a significant edge to have that kind of information, that when we are wrong, we have this Monty Hall problem, that now the bet on the opposite side was extremely likely to go, and that now this is actually a very strong bullish signal. This is an example of how you need to think as a trader. You can't be married. This is the idea of not being married to ideas or being married to trades. This is why I'm not a swing trader. I'm very malleable. And so the idea here is that now the shorts are going to get cooked. And I said this yesterday. I said the shorts are likely to get toasted. And boy, did they get toasted. We are approximately 100 points higher from where we were. And so we broke to the upside. And this is likely to carry some pretty significant momentum, given that we blew out this big selling day, which had pretty strong volume to the downside. We pushed right back through. And so this is very likely to get back and repair. And if you recall, I said that if we get above 40.20, then it's probably going to get back to 41.22 and 41.40. That's just Valhalla right there. This is like paradise for the S&P under the current conditions. That is the balance price. That is the huge magnet up here. And we're working our way back up there. It's only 100 points away. 100 points is about 2 days worth of range. So it's not out of the question. So really, we're opening in a gap higher this morning. We're leaving a pretty decent balance area below for us to reference later on. And if you recall yesterday, I showed how significant this support is. Look at that support. As we bring in these profiles, let's now throw this profile in the mix since it's part of balance. Look at how significant that support is now below. And we are initiative away from it. We opened, we could not retest down into that 39.30 area, 39.3250, and we moved away from balance to close near highs. This is what's called initiative buying. We are initiating a new direction, price discovery, and that's likely to carry us back into the 41.22, the 40, and back into this upper balance and repairing a lot of this poor structure that we left behind from the end of August. That's how things look. What's going on with this crude chart? It's very odd. Crude is missing everything down here. I've tried reloading data. Let's reload. I won't be talking about crude much. Oh, one important thing. Be careful, Andre. Be careful with that type of thinking. A bear market rally. Be careful. We don't know. We just don't know that this is a dead cat bounce or what. Let's talk for a minute about rollover. So today, traditionally, the CME officially rolls to the new contract. In other words, the next contract, which is December 2022, symbol Z2, becomes front month officially. Many different platforms and feeds operate at different roll times. Some feeds wait for the volume for December to exceed the volume of September, and then the continuous contract switches to December automatically. Some feeds like DTNIQ, they do it properly. They switch with the exchange, but the exchange put out a memo, a notice earlier in the summer saying that because the pit no longer exists, the roll has been moved from the Thursday before expiration, which is 8 calendar days before expiration. Remember, expiration is next Friday, believe it or not. The 16th of September is next Friday for triple witching, for options on futures and options on equities, on monthlies. And they switched it to Monday. So I'm not rolling to Monday. And this is so much better than the way it used to be because it's it's by Monday, the front month is going to be December. The volume will be there. Everybody will be moving at the same time. So I am on September until Monday. So Friday night, when I do the homework, I go and I reset my levels. I check the premium based on Friday's close. I reset my levels and then reload continuous back adjusted data. So all of my data is back adjusted to the current premium. So there are no artificial gaps between Friday and Monday that didn't really exist, that were actually caused by the premium difference. Your platform should allow you to adjust for the premium difference. If it doesn't, it's giving you anything beyond the current contract's beginning is likely to be wrong in terms of highs and lows, because you introduce, I'm not going to get into the mechanics of futures or the mathematics of futures and the cost to carry and premiums and things like that. But essentially what your platform's introducing is a gap that doesn't really exist in the auction. It only exists because the price of one expiration is different than the other. The best place to see this, you can find that memo on CME's website. But the best way to understand these premium gaps is you can see that the settlement of last night's settlement of December is 4,550. Look at the difference to December. We're looking at 17 points. The 17 points, if your platform doesn't allow you to adjust for the past, the September, June, March contracts and everything beyond there by 17 points, then you have a 17-point gap that does not exist. So just want to let you know about that. And I just want to let you know that I'm not rolling and I'm continuing on September through today, but we'll be talking December. So all of these prices are going to change by probably 16 or 15 points premium difference come Monday morning. Okay, so let's take a look at what's expected for today. Here's where we are in the S&P. Look at the structure. Very beautiful reversal here. One of the key indications that something is likely that the market is very strong is, despite the fact that we had this news yesterday, it had a higher low and it immediately, elastically pulled back to the scene of the crime and right back to the high. Crude did the same. Crude got news. It made a higher low. I talked about this a little bit in yesterday's, what was it? Yesterday? I don't remember. Yesterday's AMA, CTA, Convergent AMA or something. But crude moved down, it put in a higher low, and it came right back to the high. This is the market really showing us strength, and you cannot ignore. It's to your peril to ignore such an indication. So with it bouncing back up to the SOC, it is refuting news. Remember, a bull market climbs a wall of worries. This is an example of that, and then so we continue higher. This is strength. When you have a huge impulse down and it's taking back 100%, you've got strength. You do not want to fade that kind of movement once it fails through, okay? So once it fails to hold down. So let's take a look at what's expected for today. Today, the primary scenario in our price map, the primary scenario, open auction, responsive selling, right back down into the 40-20. So the 20 and the 15 are expected to present support. I don't expect the gap to close, and I expect it to turn around and start pushing to that 40.62 to bring us back to 40.60 is the 40.64 is the prior week's high. I'm expecting it to try to push to about 40.60 from about 40.20. That's about 40 points of range, and that's what we would expect on a rally day. Approximately 52 points is really a rally day range, and about 70 is to the downside, to the sell side. That's scenario one. So I'm gonna sit out the selling at the beginning, and then I'm gonna wait for a turn and then look to get long. The secondary is a pushes higher immediately, peters out, then we have an impulse. And I got to see this impulse. I've got to see some real selling going on back to the open, and then gets responsive into 20. Expect to chop 20, chop at 15. And then if it gets back into the prior day's range, which is at 40, 10, 75, if it gets back into the prior day's range, then I would have to target the point of control of that range at 49.93. So I'm expecting it to test 93 once it gets back into the range. 93, then hold steady, finish a little bit higher. We'd have another higher low, higher high. The one-time framing currently on the daily is up. The one-time framing on the weekly is still down until we take out the 64. So there's a little bit of conflict between the two. I've talked a lot. Good luck today. Don't forget to hit like and to subscribe to my channel for future videos. And also, I want to make sure you know about this EdgeQX. I'll leave this video here. EdgeQX, it's an automated trading system for active traders. Remember, the past performance is not necessarily indicative of future results. Good luck.